This region around the Great Lakes has been called the heartland. When it comes to agriculture, there's hardly an area in the world that compares.
Everybody, just hold on. I don't know what we're going to have here.
That's what brings the viewers back. That a boy.
Manage money, piling in.
Double digits higher.
So at this point, we're in kind of uncharted territory.
There's a lot of money on the sidelines.
So that was a crazy one.
Good morning, everybody. It's Thursday, June 26th, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you get any questions or comments, please feel free to drop us a line in the chat area. We'll be sure to get to it during the show. Overnight markets here, July corn up a penny and 3/4 at 4.12. July soybeans were up 3 3/4 at 10.29, and July Chicago wheat was down a half at 5.27 3/4. This morning, we had an export sales announcement, 110,000 metric tons of soybeans to Egypt, and that was for the old crop 24. Also released this morning, weekly export sales, a solid week for corn, 741,200 on the old crop, 305,500 on the new crop. That was toward the upper end of the range for new crop there. Beans, 402,900 on the old crop, right in line. 156,200 for new crop, which is above the top end of the range for what they were looking for here on the new crop side. Wheat sales, 255,200, below the low end of the range. On the wheat side, meal, 93,900, also low end, and 166,100 on the new crop, which was solid. 4,000 old crop oil sold. Nothing for new crop. Good morning, guys. Not a whole lot of fresh news. We did have some discussion. I think that was pretty good here before we came on. Ben, maybe just highlight some of the thoughts that you're looking at as we wrap up this week. Obviously, tomorrow you're going to have some positioning ahead of first notice day on Monday with the report and everything like that. So maybe kick us off and we'll throw around the room.
Yeah, I think the general idea of the discussion was that we're going to have some questions answered by Monday. The one question that is got a really wide parameters right now is how big is the Safrinha crop? And, the USDA is at one number and a lot of privates are coming in quite a bit larger than that. In some cases, 15%-ish above what was projected. And we did see last year with soybeans, the USDA was very slow to move off of their number. So I think it might be telling if they did move, reasonably up on that when we get some data from them on that. So I think that's a big unknown. Weather today looks okay. Everything is pretty good shape. You still keep seeing models out that are projecting dryness. I don't think that the weather has been, as much as people are critiquing weather people, I think they've been pretty spot on. Maybe taking a little bit of the calendar out for dryness here as we sit edging up against July. So I think a lot of the things that we've been trading, get to be fact by Monday. Looking at first notice day pressure, they did not get July SEP, anything material into carry, which I think some people were hoping for. And that's trading 5.5, 6 over today. So you get this behind you, start to get a better idea of what's going on with the Safrinha crop. If it's, I think these are, Justin said it best, that if the numbers that some of the privates are throwing around become reality, we probably are in a, you have to sell rallies in corn, but weather ultimately will get the final say.
Oh, very good. Dustin, what's on your mind here this morning?
New lows in the dollar index, new lows going back to 2022. So I think that is just one underlying tailwind that is not really being priced in as we kind of keep getting rain and really good forecasts. I think, as of late June, a lot of people are talking about above trend yield right now. And I think that's working its way into price action and into ultra wide spreads too for this time of year. But, everything is still dollar denominated. You still have gold, record high, near record high. And so I wouldn't necessarily discount that, especially when you're considering insurance policies. If you're holding a 95% ECO type policy, and you've had okay weather, not tremendous weather, especially if you've gotten some of these excessive rains, that's going to be a different story than if you're holding an 80% only RP policy and you've had really good conditions so far for the year. But yeah, I mean, really, really weak prices, well below cost of production. I think that this is a question for every grower right now: is what's the end result? This is an unsustainable path for output, for the price of corn versus the cost of inputs. So either in future years, we're going to have to see input costs come down, or we're going to start to see some real bottlenecks of how people make ends meet. We can't keep relying on government payments for profitability. So when I see the dollar index down at 2022 levels, I wonder if we're not getting a little over our skis here on trying to push down the price of corn and forgetting that everything has gone up in price: housing, groceries. Real inflation and the input side is obviously being felt. There's a mismatch on the output.
Very good. Justin, thoughts this morning?
Yeah, with the risk of a broken record, I mean, going into first notice day, I mean, we talked about this for a while. I think it's pretty obvious this is happening. Now, whether it's good or not after that's, to be seen. But as of now, it's acting like a first notice day capitulation to me right now. Now we're going to get obviously new data on Monday. That'll be the end of the quarter. So there's, fund positioning and people can change opinions after that, and going to 4th of July. So just a lot of, I think, room for volatility here in the next couple of weeks. The point about the dollar, making new lows. Dustin's talked a lot about the real being on a sharp rally, where you're starting to really hurt the South American producer also, for the first time in a long time. And, is the job of the market to hold, global producers underwater to cut back production. So you've had this, real weakening for so many years, and there's this, basic great arbitrage where the currency just kept getting weaker, and, basically their prices just kept going up because of currency moves, right? So they never felt, pain when inputs, kind of went up because of currency moves. But now, for the first time, they're, if we stay at these levels, they're probably going to start feeling some crunches too, with flat price being down and the currency being up. So, does the market start getting over, to Dustin's point, over its skis, where really look globally, we're not, in the short run, we have a lot of Safrinha crop. We can argue it's 125, 140, whatever that number is. But at the same time, we're using a ton of it. We're passing more biofuel blend rates in Brazil. They announced, going up a little bit in ethanol and biodiesel. We got to figure out what this EPA guidance is and how that's going to happen. The big, beautiful bill. A lot of these things, the deadline is July 6th or 7th for these trade negotiations with all these countries. So a lot of things are happening where, we might be getting too far ahead of we're just so burdensome, even though we do have relatively tight global stocks to use. We may just be saying, right now there's too much and everyone's getting pretty bearish, pretty in the doldrums. We might be close to a point where maybe we overdid on the downside. Again, if the weather is perfect going from here on out, we're probably gonna be lower at harvest. But, are we factoring that in too soon? Are we factoring in every bearish input because of price action? I kind of think so a little bit. I think if you look at, if we would have rallied, if everything else was the same and we rallied 25 cents instead of broke 25 cents, we'd probably be talking about everything that's kind of friendly. We'd be talking about the currency. We'd be talking about gold. We'd be talking about, geopolitical things, all these unknowns, and, building a premium in because, there's just so much unknown. The fact that we broke 25 cents instead, it's like, well, weather's perfect. Safrinha crop's obviously gigantic. There's obviously a lot of old crop stocks. It's just kind of a natural human reaction to, well, the price is doing this, so this must mean this. And we're all guilty of it, but it could end up being the case. It just feels a little like a lot of people throwing in the towel, or being forced to throw in the towel for whatever reason.
We've Justin, we've talked about it in the past, but you look at like the stock market at 43,400 this morning and stuff like that. I mean, do you see like maybe there is that equity commodity trade too, that piece of it that
it could be, the thing about equities, it's really the top 7 stocks still. I mean, it's really Nvidia and Tesla and Microsoft, right? It's the AI play. If you look at, the other 490 stocks are really not that impressive. And, in the S&P, for example. So it's, a lot of money flowing into, what this whole AI and, so that might be more profitability of some of these big companies and not necessarily the general, health of every stock. So I'm not sure. I mean, obviously there's trillions of dollars flowing into those big companies, for this AI, robotics, name whatever the hot thing is right now, but, and maybe rightfully so. I just think there's zero interest in our markets right now. I mean, I just think there's nothing, if you if you have a price move, like right now it's going down, there's, funds, but that's even the funds selling corn. I mean, it's relatively small to the dollars that we're talking about in treasuries, equities, all those kinds of things. If there was a story, if there were some trade deals, if there's some of these things that started to happen, you could get money piled right back in the other way. But the funds just got done selling, or not done, in the process of selling 600,000 contracts of corn, which is massive to our markets, but kind of small relative to, the money that they're managing. If there was a story, they'd flip and go the other way, and that's where things can get pretty volatile. Not saying that's going to happen, but you could be pressing the ball pretty deep here, where we're factoring in, option vols low, flat prices low, especially relative to currencies, really, relative to costs, all these kinds of things. We like to say, like back in the day, when you're wrong and long and it's going down, you just call it coiling, right? You just make up a new term for what it's doing. But right now it's just pressing, and there's no one's excited enough to step in and buy it.
So we've in a sense, we've been preaching patience and like all these things coming to fruition. Like, you got, call it 3 weeks, right? 3-4 weeks, we're going to know a lot about a lot, right? I mean, we can probably agree on that. Just from a fundamental perspective, you got some of these things coming to the end, trade deals, things like that. As a grower, Justin, like, I think a lot of them now are just like, okay, like I'm trying to have a firm gut on this thing, but like, at what point do patience and, hey, oh, by the way, this is just what it's going to be. Like, how do you keep your mentals with this stuff? Like, both from a trading perspective, and these guys are running businesses.
Yeah, no, it's not easy. And, to plug why we do the way we do it. I mean, you have to know, Dustin said this earlier, like, what crop insurance did you buy? What farm bill election did you make? What hedges do you have on? Like, you have to look at all that and say, if it goes a lot lower, is this the risk I want on? If it goes a lot higher, is this the risk I want on? I mean, you can go say, I'm gonna go sell my corn at $4.15 today because I think it's going to $3. That's fine. If it goes to $5, how does that make you feel with that position? So it is like running a business. Like, how do you manage that risk? And you have to know all those variables to make that decision. If a lot of times people get in a bad spot because, I know all those numbers, I get how that's all going to work, but I still think I got to make extra money because it's going lower, and throw all that stuff out of the way, and I'm going to do this, right? And that's when you can get in a lot of trouble. So you have to be disciplined. That's the hardest part to be disciplined in, is trust in how these things work, trust with what you've already purchased, trust with the plan. And then as the plan starts to evolve, well, I thought I was going to have 220 bushel corn. You get past pollination, you've gotten some good rains. Now I think it might be 240. Well, then you gotta make a little bit of a course correction, right? Because your effective floor is dropping down a little bit. You might have to sell a little extra, because you feel more confident now that the yields are going to be above that, right? So then maybe you got to start selling stuff, and then you got to look at, okay, I have on-farm storage. for example, let's say I have on-farm storage on half. I've got this big crop insurance policy that's based off the December contract, but I've got this huge carry now in December through May or July. Maybe I need to move some of my exposure from the December to the May, right? And try to capture that carry and put some more protection, take some protection off the table where I'm, deep in the money, let's say, and replace it with protection that I need, into the spring and summer and those kinds of things. So, then there's a lot of different variables that go into that, but you kind of got to do your work and look at your company, right? You talked about you are running a company. Look at your profitability. It really doesn't matter all these other things. I mean, we can't control what the next policy is going to be, the next tariff, the next trade deal, the next EPA decision, the next conflict. Can't control any of that. Can't control the weather, but we can control is based on what you know on your farm and what you've already done, what's the best course for you. Not a sexy or fun answer, but that's the answer.
It's not a sexy or fun market either right now.
Yeah, right.
It's just the reality. But no, that's good stuff, Justin. And I think, as you highlighted, give us a call. Reach out. We'd love to visit with you, talk to you about how we do it, what we're looking at, and some of the things we talk about on a daily basis there. Just came into the open. We'll get a quick readout here. July corn down a quarter, 410 is the last. July soybeans are up 2 at 10.27. And July Chicago wheat's down 3 1/4 now at 5.25. We've got tomorrow's going to be Friday. We've got Fun Fact Friday, so be sure to tune in. Never know what we're going to get there with Brian, so that'll be exciting. We appreciate everybody that tunes in, supports the show on a daily basis. If you wouldn't mind, throw us a like and certainly subscribe. Doesn't cost you anything to do so, and it'll keep you up to speed on everything that's going on with AgYield. So again, thanks to everybody that supports the show. We're doing this live every day that the markets are open on X, Facebook Live, and YouTube Live, 8:15 Central Time. Appreciate the thoughts and comments here this morning, guys. It was a good show. Hope everybody has a great day, and we'll talk to you again tomorrow.
The War Room is proudly presented by AgYield. For over 50 years, the AgYield team has provided grain marketing and risk management solutions for growers across the country. Our veteran consultants harness cutting-edge technologies to pinpoint risk, optimize market performance, and protect your farm's profitability. Discover a new approach to farm revenue management at agyield.com.
Hey guys, Jack here. Be sure to support the show by hitting the like button, leaving us a comment, and subscribing to the channel for all the latest updates. Thanks for watching. We'll see you next time.